Let's come to this now. The nationwide lockdown continues to cripple the property sector. Investors are set to lose more than 200 billion rand this year, with more jobs at stake. To discuss this further, I'm joined now by John Loos, the property strategist at First National Bank. Mr. Loos, thank you so much for your time. This number is quite staggering. 200 billion rands is what the property sector is currently dealing with in terms of losses. Is this just for the year 2020?
Yeah, I mean, the listed property sector's index on the JSE has fallen by about 40%, or it's down since the beginning of the year. And it was down somewhat, not as extremely, in recent years from about 2016 or so. So property has gradually come under a bit more pressure with a long, sort of multi-year stagnation in the economy. But this really was almost the straw that broke the camel's back. We've got relatively high property valuations by historic standards. The JSE listed sector was relatively highly valued, and then comes a very deep lockdown enforced recession. The Reserve Bank putting it at near 8%, something we haven't seen in our lifetime. So I guess it's understandable that you would see quite a significant drop in the listed property sector.
And at the brink of this, businesses obviously struggling and joblessness. This is the reality of the sector on the ground.
Oh, it is, and I mean, we've seen already in recent years vacancy rates rising. So, and this is the whole problem. All the numbers were already weakening for some years before this. So we went into this lockdown on a very fragile footing. A lot of businesses were financially already pressured, and then 2 months of forced lockdown in a retail mall, no revenues for many businesses, and they really, a portion just couldn't even last through the lockdown. Rentals, TPN data, rentals for retail malls were down, I think, about 40% of tenants in good standing in the lockdown. The rest weren't in good standing. So, yeah, it's just come at a really bad time because of the fragile nature of our economy just leading up to the crisis.
You speak about vacancies there, and one that I have seen definitely has been in the commercial real estate. I mean, every other opening has to do with either a business building, an office park that's being sold, or a floor. And you could see there, literally, real estate, companies doing their best to leverage off the situation by saying, hey, you could buy this, real estate, and these would be some of the benefits. You could perhaps rent out a property and not pay for the next 6 months or so. Are we seeing there just creative innovation coming up from the sector, just trying to sustain itself at this time?
Well, I think the creative thinking is starting. The vacancy rates were getting higher in the northern suburbs of Joburg in office space, for instance. Now we've had this forced lockdown, and I call it the Zoom boom, but, we all have to work from home. And suddenly corporate CEOs are saying we might not need so much office space anymore, which exacerbates the vacancy situation and the pressure on that office market. So now suddenly, I think there's a lot more thinking going into what are we going to do with these buildings? And, I think a significant portion will probably have to be converted into something else. Office space, we've already with CBDs been converting a lot into residential space. Probably more of that to come. And for the retail malls as well, there's going to be significant space open. Online shopping is an additional challenge. What are we going to do? Is it going to be last mile depots? Is it going to be some residential conversion of retail properties? That's been happening at some places in the US. There's all these ideas bandied around. Not too much, not a lot of action yet. That will come. The planning phase is quite long. But yes, I think the world over, not only in South Africa, many starting to try and apply their minds with regard to future retail space and office space, especially.
Right. The big question always comes up, is this the best time to invest in property? This could be residential, this could be commercial, but when we look at residential, what is your, advice and perspective here in terms of, incoming, entry-level property investors?
Well, I think for the investor, it's going to become a better time probably over the next few years. We're starting to see in the commercial space, anyway, capitalization rates, forward-looking yields, in other words, starting to move upwards. I suspect in the residential space, you get an accurate measure of yields there. They'll probably increase too over the next few years. And that, rising yields obviously says to you that you're paying less for the same income stream as previously was the case. So I think that the buying opportunity is going to become more attractive over the next few years. The old investment adage of buy on the lows and sell on the highs. It's not always adhered to, but that's how it should be. The last big buying opportunity, the really great buying opportunity in South Africa was probably in the late 90s. Very cheap property at the time and far higher yields than now. And people who bought then really did well out of property. And I think in the coming years, the next big buying opportunity is probably mounting.
All right. I see on our screen there it says we're running out of time. I have to slot this in quickly before I let you go. But, I mean, I needed to ask you in terms of, banks. Are they coming to party? Will we be seeing more of 100% loan grants being given to investors?
Well, I suspect the banks as a group might be a little bit cautious with their lending through this very troubled economic time. Mm-hmm. On the residential side, in recent years, there was significant growth in the amount of 100% loans being granted to residential buyers. I don't think that increase would carry on for the time being. Typically banks get a little bit more cautious in tough economic times, which is not a bad idea. It might be a good investment opportunity brewing for property, but there will be a lot of financial stress around, and banks have to take cognizance of that reality as well.
John Loos, property strategist at FNB. Thank you so much. Good talking to you. Thank you.